All right, so Tesla just dropped its latest delivery report, and whoa, it sent some serious shockwaves through the auto industry, not to mention Wall Street. So, what is going on with the world's most valuable car maker? Let's get right into it. Okay, boom. This is the number that started the whole conversation, negative 16%. That's a 16% drop in vehicle deliveries in just the fourth quarter, year over year. I mean, that is a huge miss, and it really caught a lot of people by surprise. But, a single number like that, it never tells the whole story, right? So let's actually unpack what this drop really means for Tesla's present, and maybe more importantly, for its super high stakes future.
Okay, so to really get what's happening, we've got to start with the official numbers straight from Tesla's own report.
And here's the thing. It wasn't just one bad quarter. If you zoom out and look at the full year, deliveries actually fell by 8.6%. We're talking about going from 1.79 million cars in 2024 down to 1.64 million in 2025. And what's really crucial here is that this is the second annual decline for Tesla. That's starting to look less like a blip and more like a trend. Now, this slowdown didn't just happen in a vacuum. At the exact same time Tesla's numbers were dropping, a huge wave of global competition was seriously heating up. I mean, for years and years, Tesla was just the undisputed king of the EV space, right? It was their crown jewel. But in 2025, well, that officially changed. And look, the scale of this shift it's just massive. China's BYD didn't just squeak past Tesla. No way. They absolutely surged past them, selling 2.26 million EVs for the year. A new global leader has officially been crowned. And if you think that's something, check out what happened in the critical European market. The story there is even more dramatic. In just the first 11 months of 2025, Tesla registrations plummeted by a staggering 39%. At the same time, their rival, BYD, saw theirs jump up by 240%. I mean, talk about a massive swing. So you gotta ask, what's behind this slide? Well, it turns out it isn't just about the competition. Tesla was also dealing with a bunch of other pretty significant headwinds all year long. Okay, let's bring it back home to the US and see how this played out. The year was already off to a tough start, but the really big event was the end of that $7,500 federal EV tax credit on September 30th. What that likely did was pull a bunch of sales forward into Q3, people rushing to get the credit, which then created this huge cliff that sales just fell right off of in Q4. Now, the source material we're looking at also points to another factor, a pretty sustained consumer backlash happening in both the US and in Europe. And this has reportedly been linked to the CEO's public rhetoric, which has included things like endorsements of extremist political groups and even public calls to abolish the EU. Okay, and this is where the story gets really weird and kind of fascinating. You've got declining sales, you've got fierce new competition, you've got all this public controversy, and yet in the second half of the year, Tesla's stock rallied hard. So what gives? Well, to solve that puzzle, you have to look beyond the car business, because for a lot of investors, Tesla isn't just a car company. They see it as something much, much bigger. For starters, let's talk about their energy business, because it is absolutely booming. In the fourth quarter alone, Tesla deployed a record-breaking 14.2 gigawatt hours of battery storage, and that's everything from their home power units all the way up to these massive systems for utility companies. So you take this incredible growth in the energy division, you combine it with a couple of other factors we're about to get into, and suddenly you see why investors pushed the stock up 40% in the third quarter alone. It even had a new all-time high in December. It's like they were completely ignoring the vehicle delivery numbers. And that right there, that is the disconnect that explains everything. See, for a huge chunk of investors, this isn't about the cars Tesla is selling today. It's all about the revolutionary future the company is promising for tomorrow. And right at the very heart of that promise is a concept Elon Musk likes to call sustainable abundance. Okay, so what does that actually mean? Well, it's this big vision of a future where autonomous robots and clean energy systems handle most of the work that humans do today, which in turn would create this world of incredible wealth and opportunity. So, in practice, how do they get there? This whole vision basically rests on three core pillars. Number one, a massive fleet of self-driving robotaxis. Number two, AI-powered humanoid robots that can work in factories and service jobs, even in our homes. And number three, the huge battery and energy systems that are needed to power this entire new world.
So all of this leaves us with the ultimate question, really. When you look at Tesla, what do you see? Do you see a car company that's struggling with new competition and facing a sales decline? Or do you see a robotics and AI company powered by sustainable energy that is actually just getting started? How you answer that question, well, that explains pretty much everything about the wild and very divided story of Tesla today.